Can you imagine youth unemployment? We're talking 16 to 24-year-olds at 18.8%, folks. Yes, one in five 16 to 24-year-old is unemployed in China. Folks, we started talking about the daily financial news and the impact of what's going on in China probably 2 or 3 years ago. If I remember correctly, our first conversation centered on a real estate company called Evergrande. Remember those conversations? If you're an OG, leave a comment below. Have you been following the daily financial news since the days of Evergrande? Man, that might be 3 years ago. I think I was recording in my daughter's bedroom way back when. So at the end of the day, we need to talk about and understand that the world economy is slowing down. There was some PMI information coming out of Germany that shows that raising rates has, yes, successfully beaten back inflation, but looks to also send the Eurozone into a hard landing. What is going on in China is nothing more than a crash and a collapse. They were an economy that was built on real estate and fakeness. That has now come home to roost. You have an entire swath of their consumers save, save, save. They are not spending. They are not participating in the economy. And that is causing large, large problems. Ripple effects from China's slowdown probably would be felt in countries like Australia, who are large exporters of raw material. Again, the slowdown in the world economy is happening. It definitely looks like the U.S. economy is the standout with at least what appears to be some positive growth. But the fact that the Chinese economy has nearly 20% unemployment for the youth should be a concern, right? Not only do you have an economy that has collapsed because of real estate and belief in the banking system, but now you have the next generation coming up not being employed. That will have ripple effects for years, if not decades to come, as they kind of don't participate in the economy. As we talked about yesterday in the daily financial news, we got lots and lots of Fed speeches, lots and lots of Fed talk. We've got to diagnose what is coming. Today, I've got feedback from two Fed presidents, Neil Kashkari and Fed President Bostic. Let's go with Bostic first. Fed President Bostic was one of the more hawkish members of the Fed Open Market Committee. He is out this morning saying that he believes the neutral interest rate is somewhere between 3 and 3.25. I believe it was yesterday I highlighted that I think it's between 3 and 3.5. What does all that mean? Well, it means that we are on a series of rate cuts. I think the only thing to, argue, discuss, think about is how fast do we get there? So what else did Fed President Bostic have to say? He said basically the U.S. economy is ready for neutral. We have greater risk on the employment side now versus inflation. He did say that the next move, not necessarily another 50. He said we are a fair distance above neutral. What does all this mean? What is this Fed President Bostic talking about? I basically think he is saying we are going 50 in November unless a couple of data points surprise one way or the other. Again, I think 50 is already baked in the cake. They are going to go 50 in November, in my opinion, and likely give another quarter in December. So we will likely see 125 basis point cut between last Wednesday and the end of the year, setting up for another 125 to potentially 150 in early 2025. So the rate cutting cycle has a lot to go. All right, what did Neil Kashkari have to say? Neil Kashkari said, I see another 50 basis points in 2024. Neil is trying to walk the line. Neil is trying to set up, hey, let's be disciplined. Let's go a quarter at a time. I think that is hogwash. I think they're going to go 50. Neil also said, I expect the Fed to dial down the pace of rate cuts. What does that mean? We shouldn't always expect 50, which I think is fair. I think they do one more 50 and then they go quarters after that. And then this is what Neil said. I expect the Fed to move aggressively back to neutral. Now, in Neil's opinion, neutral is right around 3.5. Again, remember, Bostic was more like 3.25. It's right around there, right? 3 to 3.5. What does that mean for you and I? That means the Fed will be cutting down to that level, right? They want to hit this mythical R star neutral rate, not expansion, not contracting, not tight, whatever. What does this mean for you and me? Well, first off, you could expect your savings accounts to have lower interest rates, CDs, things of that nature, money market accounts, all will be slashed rather quickly. You should expect some lowering in credit cards and auto loans and home loans, but I don't think another 150 basis points in Fed cuts equals 150 basis points lowering in mortgage, for example. It is not a 1-to-1 ratio, and we should not expect that. At this point, I think it will be very interesting to see if mortgage rates get below 6 in 2024, which I don't think is likely. I think we're going to be in the low 6s, 6.1, 6.2. I don't know if you've checked the 10-year note. I checked about 20 minutes ago, so it may have changed. But the 10-year note is up again. It is up again. Yes, folks, since the Fed cut 50, the 10-year note has done nothing but go up, 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 which means mortgage rates have gone up, up, up. So pretty interesting to watch at. Again, I do believe that the market currently is a toss-up between 1/4 and 50 in November. Again, I'm throwing my hat in the ring early. We are going 50. I had no idea what they would do last week, right? Were they nervous or scared? They're scared. So I'm going to stay on that theme and assume they give us 100 basis point cut within a 2-meeting period. Got some data on the banking crisis. If you remember last week, we had a conversation with Jonathan Twomley about regional banks and just how much cap rate has to move to make banks whole, but to have equity lost. Remember that where we turned a $100 million building into 70 million, and then we moved it with half a basis point in cap rate, and suddenly the banks were whole, equity was lost. Well, according to some Q2 analysis, the unrealized losses currently sitting as wait to maturity or hold to maturity is sitting at roughly $513 billion. Roughly 20% of that is on the balance sheet of the big boy Bank of America. I do believe Bank of America is the second largest bank behind JP Morgan. I might be wrong about that, but I do believe they are second. They have almost $11 billion in unrealized losses. Again, this is hold to maturity, which is what they're using. FDIC problem bank list is now grown to 66 banks. These banks, generally speaking, are tiny, right? We're talking 1 to 6, 7 branches. But yes, the problem bank list is growing. We should expect more bank failures. But again, back to that conversation with Jonathan Twomley. If these problem banks, if these unrealized losses are on commercial real estate, specifically multifamily, if the Fed could engineer slightly lower cap rates, there is a chance that these unrealized losses shrink. Because again, if you lower cap rates, values go up, the unrealized loss goes away. So one of the things that I feared when they went 50 is a banking crisis 2.0. I think if the Fed gets on their horses and lowers Fed funds rates 200 basis points total, there is a chance that cap rates lower 0.5%, thus increasing value. Again, NOI divided by cap rate equals value in commercial terms. So again, something very interesting to look at. I want to congratulate 4 new school members. 4 new school members have joined. I want to thank Daniel, Corey, Ken, and Tina, and of course, Ryan, aka All-Nighter Hider, have joined the school community. We are aiming to become the #1 real estate investing school on the platform. Today, we are ranked number 4. We could get to #1 with probably 50 more students and some more interaction. I want to thank Jared for hosting yesterday's accountability group. It ran 3 hours. There were 15 to 20 people on the accountability group. Again, folks, you need to get in groups that are doing the work, speaking the vocabulary, asking questions. This is how you grow. This is how you move forward. Don't do it alone. In our school community, we now have 3 accountability groups. We have one on Sunday, one on Wednesday, and just this morning, Max ran the first Monday morning accountability group. Congratulations, Max. Thank you for doing that. Mark, thank you for the inspiration to have that. It would be a great goal as we grow to 1,000 members that we actually have an ORAT accountability group 7 days a week. Wouldn't that be great? Again, join the one that fits your schedule. You don't join all of them. Just find the one that you click with, you sit with, and we will go from there. Also, don't forget, you're going to get the first opportunity in about 19 minutes inside school to talk to a 10-year Wall Street veteran. You're going to be talking with Taylor from Life Goal Investments, who spent 10 years on Wall Street. We're going to ask him about the Fed. We're going to ask him about recession. We're going to ask him about a balanced portfolio. What the heck is going on? Trust me, you are going to want to be a part of that conversation. The invite is in the calendar. If you haven't joined, join now, and you can participate in that conversation. We did get some economic numbers today. We got the flash PMI for services and manufacturing. Again, what these numbers are irrelevant. What we are looking for is, are they above or below 50? Are they getting better or getting worse? We'll go with manufacturing first. Previous manufacturing reading was 47.9. It was expected to get slightly better to 48.5. It disappointed and got worse. It is now 47. So drastically missed forecast and was worse than the previous month. A reading like that makes me think that the Fed knew it was coming. It is getting weak out there, and thus the 50. Well, what about services? Frankly, Michael, in the U.S., services are more important. We have long since given up being a manufacturing hub for the world. What about services? Well, okay. Previous was 55.7. It was expected to get slightly weaker, but still okay because it's above 50 to 55.3. Slightly better than expected, 55.4. But from where I sit, it just means worse than last month. So again, pretty interesting. Guys, I don't know if you ever stayed at a Motel 6. Motel 6. Looks like Motel 6 was sold. I didn't even know this. Motel 6 was owned by Blackstone. Blackstone owned Motel 6. They just sold it for $525 million to a company out of India. I'm going to say it's called Oyo. O-Y-O. I'm not sure how you pronounce that. Any guesses? O-Y-O? Oyo? I don't know. Anyways, we'll move on. I want to talk about something that I think is pretty interesting. Doom spending. Doom spending. This was a survey done by Intuit Credit Karma. Intuit Credit Karma went out and interviewed 1,000 folks. And they found that people who are doom spending, 25% of that population is doom spending. They are chronically online. They are constantly receiving bad news. Folks, you know, over the last year or so, I have taken a particular stance that if you are online and your social media feed doesn't leave you smiling or happy, that is on you. If you are fearful or scared or envious or jealous or hate, whatever, if you just have any negative emotions because of what you are looking at, that's on you. Let's take some extreme ownership. Let's start blocking accounts. Let's start blocking words. Let's turn these devices into bastions of positivity, bastions of hope, bastions of good news. Folks, if you were to look at some of my feeds, it would be puppies and jokes. Block all that other nonsense. If you like sports, great. But stop just going down these negative rat holes. If you guys don't know the deal, these algorithms are going to keep feeding you what you're clicking on, scrolling on, pausing on. They're getting remarkably good. If you take some ownership for a week or so and start blocking actively negative accounts, hateful accounts, just crap accounts, your feeds will turn positive. Looks like Intel's had a couple of rough years, really bad year this year. They are being circled. Is there blood in the water at Intel? I have no idea, but it seems like we got Qualcomm out there extending some overtures to maybe buy Intel. We got Apollo Group talking about a $5 billion capital investment. Lots and lots of stuff going on at Intel. We'll see what happens there. Folks, that's what I got for you today. Again, remember, own your feed. If you're interested in real estate investing, getting rich, getting wealthy, you got to join my school community. It's $20 a month on purpose. Just expensive enough where the trolls don't do it, but cheap enough where everybody can. We're giving you weekly opportunities to interact with millionaires. I go live monthly in there. We've got boot camps and just all amazing free courses. The community is over 250 strong. It's now interacting with itself. We got 3 accountability groups. We will be the #1 real estate investing school on school. Join now. Let's be a part of it. Let's get there, and let's just see what we do. All right, folks, take care. Hopefully I see you in about 13 minutes when we're in school talking to Taylor from Life Goal Investments. Have a wonderful day. Like, subscribe, comment. Talk to you tomorrow.